Morning.
G'day, Gav. How you going?
Yeah, not too bad.
That's
Very
good to
good on a
hear,
Friday.
mate. Yeah, absolutely. Another interesting week in the markets. Obviously, US market closed last night for Thanksgiving, so not a lot to go on this morning, but it's been an interesting week.
Yeah, even the European market last night was pretty washing around with no lead from the US. I think everyone's got their eyes on that, waiting to see what happens as we go into Christmas.
Yeah, very true. Now, traditionally, when the US come back from Thanksgiving, they get a bit of patriotism, a bit of gusto behind them, and we do tend to see a bit of a rally coming out of Thanksgiving. So, it could be interesting to watch their market. They got half trading day trading tonight, and then back to normal Monday. So, it could be a couple of interesting days.
Yeah, we're only 3 weeks away from Christmas and sort of feels like we could get a Santa rally this year. I think what are the numbers on that? Are some great?
Look, it's about 9 out of every 10 years we've
Yeah,
had
wow.
a Santa rally, and I think if you look at the last few, Santa's been turning up earlier than expected. The
Yeah,
first
right.
part of December's tended to be stronger.
Yeah, right.
In the olden days, it used to really be from about the 14th or 15th. Volumes would start to taper, but you'd get those days where we just put on 40 or 50 points and just sort of did it for 3 or 4 days in a row. And it's like, oh, hang on, we're up 300 points the last 2 weeks. So I think it's a little bit earlier in December now. Maybe everyone's getting set for that later part of the month, but definitely a pretty consistent rally you get for December. So definitely a bit of a theme that we're going to look at today.
Well, the Thanksgiving holiday might be the catalyst for it, so it could be an interesting week next week.
Yeah, definitely, definitely. Now, what did you have as our first trade to look at this morning?
Yeah, so I've sent a thing out to our clients during the week on switching from, we have a lot of clients, so I have a lot of clients that have APA, which is a pipe infrastructure group. It's had a
Yep.
huge run in the last 12 months or so. You can see there on the left-hand side. It's now above all its price targets for the next 12 months. So it's really only got downside projections into it. In terms of its growth profile for the next 12 months, its infrastructure profile sort of pushes out beyond the next 12 months. So there's no big catalyst for it to keep running up. So it's not a bad time to take profits or trim. And then on the other side, if you look at MCOR, it's a big multinational company. It's sold off a bit. All its price targets are up to the average price targets, up around the 25% mark. Pays a little bit smaller dividend, but you're going to get that growth over the next 12 months. So it's both these stocks you can trade options over. So if you held APA, you could sell calls in it. If you wanted to get into MCOR, you could look to sell some puts as well.
Yeah, look, some good ideas there. I own both stocks, but I do think I will lighten out of APA shortly
Yeah.
and move that money into Amcor. Both stocks that I like, but I do agree with that. APA really has pushed itself to about as high as I think it's capable of going,
Yeah.
where Amcor's really got that upside potential. And if you do want to trade options over it, whether you're selling a covered call over your stock or you're writing a put to get into the stock, there's some good premium for a 13 odd dollar stock, so it can be a pretty attractive one to play.
Yeah, MCOR's certainly been a great stock to trade options over because around that $100,000 exposure, you're going to get a reasonable premium to make it worthwhile on a monthly basis. So, yeah, it's certainly one to look for the upside.
Yeah, fantastic. Some good calls there, mate.
Yeah. And on your side, H, you're looking at a ETF there.
Yeah, so we have a couple of ETFs that have listed options over them, so they're tradable in the option market. STW, which is basically an ASX 200 ETF, so trying to replicate the major index. My view, and as we just talked about, we feel a Christmas rally of some description is likely to occur, especially after the recent sell-off that we've had. I can see our market back at around 88.50, 8900 as we head into the end of the calendar year. So this would be a great one to pick up. And there is pretty good premiums selling puts. So if you're happy to buy the ETF, it's around about $77 at the moment. If you're happy to buy, 1,000 shares in the ETF, which about $77,000, you could look at selling a put at either 76 or 77 dollars. And if exercise, obviously you're going to pick up the ETF, but if not, there is pretty attractive premiums there, and it gives you a very broad market exposure. So it's not really stock specific, but it will really replicate what the index does. So one that we like, and something that I think more and more people should look at is trading these market ETFs.
Yeah, particularly if you're just starting out with 20, 30 grand or just kicking off, is slowly accumulate into broad index ETFs. It's a great way to build your base before you start picking individual stocks. And yeah, there's a couple of them, and this one stands out.
Yeah, it definitely does. And look, yeah, definitely. Any time there's any sort of panicky news about share markets falling, usually the next day is a great time to buy one of these things, because
Yeah.
if you average them out over the long run, they do perform very, very well.
Yeah.
So something for all investors to look at, and certainly something I know we all do for ourselves, is try and pick up these things when there is a bit of a sell off. Try and throw 5 or 10 grand into one of these things when the opportunity's there. But definitely for doing an option trade. Great premiums, and something I know we do in our fund that we run, and also I've got quite a few clients that are looking at these at the moment.
Yeah. Yeah. Great one. Well, that's it for me, H.
Yeah, that's it. But I thought I'd just mention, obviously, those very strong capex numbers that we did see. I think that was quite a surprise, the length, the strength that we saw across a lot of sectors, which really does bode well for general business conditions leading into the new calendar year. Obviously, inflation, CPI the other day was a little bit higher than expected, but to see very strong business capex is pretty exciting for business confidence into the new calendar year.
Yeah, they were great numbers. I mean, I was a little bit surprised. It might have also fed into why that inflation number was very hot as well, but
Yes.
that was strong. I think it surprised everyone how much investment's going on in infrastructure, which is a really good sign for our economy generally.
Yeah, definitely, definitely. Right, mate. We'll have a good one.
Okay.
Let's hope we see a good rally over the next couple of weeks, and
Yep.
these couple of ideas will look pretty good.
Great. Good one, H. Well, I'll talk to you again soon.
Thanks, mate. Cheers,
Yep.
mate.